Hey everybody, Brian here from quantlabs.net. I want to show you typical good, decent data sources for market trading ideas. I deal with quite a lot of people from VPs and large banks all the way down to students and newbies, and then of course all the more advanced developers and traders and big trading operations. Now, the thing is that there's a simple pattern, which is simple, and the other big, uh, we'll call it secret, is data. Data is the way the markets are basically screaming at you with many opportunities. Like you could probably count 30 to 50 a day, regardless of market direction or whatever market conditions there are out there. The problem is deciphering them and what to look for. And I've said this time and time again. You can either trade like a mathematician, you could trade like a computer scientist, or you could trade like a trader. And more consistently, I'm finding people that primarily trade like a trader, but use the other techniques of math or computer science to their advantage over every other chump out there, does better and does better with more trading profit potential, with a better understanding of why price direction happens in certain market assets. So as a result, it all comes down to data and how you interpret it and how you time it. We've all heard about technical analysis and how we'll just chase stock opportunities, where now, let's just as an example, people think that Amazon's a great stock and it's going to have great performance. And it's now hitting records. So all of a sudden, people are now jumping on Amazon. But lo and behold, I could tell you, you better off to short Amazon, because it's going to start to turn to the negative. So to be able to forecast these kind of moves is to be able to watch your data. And the question then becomes, well, what data sources can you use? Well, if you know me, my primary as a workflow and learning and getting trading ideas is from Bloomberg News App. I've said that time and time again, and I'm just starting, well, not starting to realize, but I've always realized people are so lazy that they prefer to use a marketing, trading guru, or some piece of software, or some little magic fairy dust that will make them millions and make the millions forever. And that's a load of hooey. Uh, Actual matter is that everything does come down to data. Everything does come down to, yes, from a historical point of view, you can watch markets and compare things that have happened historically, but doesn't mean it's going to happen. The problem I say that is simple. When you see an opportunity come around and you somewhat know potentially that it is a trading opportunity, the question then becomes down to how do you time it to get buy low, and then measuring that magnitude of that upward momentum to get maximum profit, or as they say, sell high. If it was easier than said than done, we'd all be millionaires. But of course, we don't have the ability. So I think when you start watching the Bloomberg News app specifically, and really, if you have the ability to have the Bloomberg terminal, that will even give you a true edge over all the other chumps that do what I'm doing. And yeah, but we all don't have $10,000, $20,000 a month for this type of service. But if I did, I'd definitely use it. And I don't think I'd be sitting here talking about it. Anyways, so obviously we've got the Bloomberg channel or website here. So I'm going to use some examples of some charts. So we get our usual blah, blah, blah in whatever article. And the nice thing is I now speak in charts. If I don't see the market by some chump that cousin Johnny's got a marketing tip, I'll just tell the guy to buzz off. But charts speak a lot. And the key here that I'm looking for is the overall pattern that can come out of this, but doesn't mean a whole lot. But what I'm always looking for is the source. Where is the source of these price lines? Where is the source of this data or this chart? So you can see here, we have some interesting patterns and relationships that we can understand and interpret. But the key is where do we get that? And the other neat thing about this is when you analyze the markets this way, you'll see how it works, how the professionals see it, not some guru out of Singapore with a cocky attitude that worked at Goldman Sachs 10 years ago, because all that methodology is so obsolete. It's a joke. But as you can see here, this source for this chart came from a report put out by Morgan Stanley. So when you understand these sort of things and know where to look, you're going to get more information than most people will never even think about. And let them do what they need to do, which is basically do their technical analysis, let them play with their little fancy indicators. But the nice thing is, this is the difference between the winners and the losers, and the difference between dumb money and smart money. This is smart money, what I'm showing you. The dumb money are the ones that are going to be chasing the opportunity when it's already too late. And by the time it happens, guess what? The market will turn, and the pros will already have exit positions. And the dumb money comes in, and you can use that as liquidity to get out of your trade or your position. So this is just one example. Another example is, of course, oil. Here we have Bloomberg as a source, but here's the interesting thing. This is another example. Futures market. Futures market says a lot. I mean, it's actually screaming at you. The open interest on puts and calls of options as well. So there's many opportunities there, and you can use that not only just to forecast some, but you can use it somewhat for confirmation on a theory. I've already posted one example a few days ago for my members as an example. Everyone's going on about the Trump trade and the Trump bump. When's it going to end? How are we going to know it's end? Well, it's pretty simple. As one indicator, and it only came from Bloomberg, where they use Tiffany's, diamond retailer or seller or whatever, when they had a huge tank on their stock and a huge miss. I mean, what better methodology or confirmation or trading could you use to signal that yes, the Trump trade, the Trump rally is now done? It's something like that. But most traders will never see that, or retail traders will never see that. So when you understand these relationships and you can add it to your arsenal on what to look for down the line as part of your automation, you're actually light years ahead of everybody else. So one more example here. Bitcoin has been an amazing run. I put up a chart last week for my members coming out of the Bloomberg app. If you had put your money into Bitcoin in March, come May at some point before the turn of Bitcoin, right here, you would have doubled your money. Now, if you really want to get fancy, if you put money into, I think it was like $1,000 in a Bitcoin in 2010, without touching that in Bitcoin, you would have turned that Bitcoin, call it trade, from $1,000 to over $2.5 million in like 7 years. It's incredible, but you never have seen that. But yet I knew that this Bitcoin was going crazy for a long time, and that was obviously, again, from Bloomberg. You learned how the Chinese were trying to get money out of China. The only way they could do it was either through doing this creative Hong Kong invoicing technique, which the government clamped down on, or basically use Bitcoin as a way to transfer money out of China, which is what drove up the price here, as you can see. So, it's things like this that you can use for confirmation, forecasting, and to get more consistent profits. So, That's my whole point with Bloomberg. So where do I go from here? Well, automation and call it algorithms. I'm not looking at algorithms as a consistent way to have, let's say, 5 strategies always running and I'm going to profit here and there. It's going to be a lot more than that. I think what it comes down to as adding this sort of exercise to watch the Bloomberg data, specifically the sources, and look at those sources and add those sources to your data as something to watch on a consistent basis. Understand those patterns, build those patterns, those rule-based patterns and logic in your, let's say, Python scripts, and you can be able to better gauge your trading when it comes really down to forecasting. Here's where the historical analysis comes in. You can get an idea based on the historical pattern to be able to confirm the position, but it's very difficult to, as I said, to time it. But there's many other options available to you that you probably don't know. The other problem is to be able to measure. But if you look at history at a particular trade, you may be able to use that as a gauge, but it's not a perfect gauge. It might not be a guaranteed gauge, but it can give you an idea of what to add into your rules, in your script, when you're watching that asset, when the trade position takes hold. So these tips that I'm trying to give you on your data source, specifically what's in right here from the charts and the source, are key. And I'm planning to track them as many as I can. I'm posting 20, 30, 40 a day in a 24-hour period, trading period. And what I'm seeing is I can probably build, I won't call them strategies, workflows with rules that enable me to get better forecasting, consistent forecasting with better, hopeful trading results built around these patterns that I'm seeing consistently in this, call it, daily Bloomberg consumption. I'm hoping you follow suit here. I'm planning to build trading scripts around this. Not really interested in building one particular kind of formula or one particular kind of strategy. I think they work, but when you factor in, let's say, 240 days of, or 240 trading days of the year, let me ask you, if you're going to follow that mentality of a trading strategy, out of those number of trading days, 240, how many of them will actually mean that you can use that particular trading strategy that you want to develop will actually happen over the year, and meaning 240 days? So just something to consider, and I'm hoping this helps you out. Over and out. Later.